Paul, it's great to see you. I've had all the hats, Dow 10,000, 20,000, and every 1,000 from then on. And the Dow 30,000 hat was ready to go. We were just a stone's throw away. But you think it's coming, and sooner than later.
Good to be with you again. I was with you only a couple of weeks ago on March 24th when I said that I thought the odds were very high that a bottom had formed. And that's what I had written about the day before. Well, I did not think the market would rip this much in this short a period of time. I thought we'd rally significantly, not as much as we have. Regarding Dow 30,000, I don't think it's that much of a stretch. Listen, rates are still obscenely low. They're not going anywhere for a long. You may be retired before rates go up significantly. So, and you've got a long and healthy career ahead of you. So rates aren't going anywhere. With rates that low, pricing, market multiples are going to stay high. They're going to stay elevated. So there's a disconnect between where the stock market is and where the economy is. That's not unlike what we've seen in the past. People are way too focused on the headlines of today. We had a beautiful rally from March 23rd to yesterday, a little higher than I thought it would go. I thought we reached certainly some kind of ceiling. We should be in a trading range for now. I mean, today's action, it's not the end of the world. We had a huge run. We're going to give some back. But Dow 30,000 next year, to me, is not a stretch at all. And once we get going, Dow 40,000 will be a fait accompli. That's going to be an easy one. I may be conservative in that number, but the focus here is over the coming, 2, 3, 4 months. Not next year is an easy one.
Yeah, and the momentum trade, I mean, basically we were rolling, right? We for since the election went from 18,000 to 20 to 25, and we were just approaching 30. And as you said, we really shot up from that March 23rd low. And kudos to you. I'm sorry I didn't recognize that you said that on the 24th that the bottom could be in. But the question now is whether or not we're going to be retesting bottoms, because people want to know whether they should be buying some dips. And you mentioned words like feel. That goes right to emotion. Paul, I mean, when do people get in and buy some dips? Because we've already run up so much. So we've been together a couple times in March, and it was a much tougher environment than it is today. But what I have said, and I keep telling people, is that they don't sound me all clear. You're not going to be able to, quote unquote, comfortably buy. Markets bottom when the news is the darkest. They don't bottom on good news. Markets bottom on bad news. And so many people say, I'm not going to invest my cash until I feel better about the virus. Well, I got news for them. Unfortunately, I don't want to be cavalier, because I lost a friend last week from this. People are dying. However, separating out the health crisis from the market crisis, markets bottom long before the health news and the economic news turns. So, well, let me interrupt you, because I know you have some great ideas here. I saw you have semis, I saw you have biotechs, and I saw you have some real names here. Alibaba, JP Morgan, Wendy's. Tell me about some of these names that you have on the list here that you're eyeing. You're going to be buying these, or you're buying these, recommending these?
Yes, yes, and yes. So one, semis we've loved for 2 years. We continue to tactically trade it, but it's been a position in portfolios for 2 years. And I think there's a number of semis that have alpha, have some kind of something unique that they could outperform. But I think it's easier for the average person to buy, SOXX or SMH. Those are semiconductor ETFs. I think you buy them into weakness, you'll be very happy down the road. That industry is only going to grow and expand. Biotech's another one we've owned and liked for a while, and I've sold some into rallies. I've bought some into strength. I plan to continue to do that for the coming days, weeks, and months. On an individual basis, Baba and Wendy's are two that I continue to go back to here because they're unique. On my first visit with you in the new year, I was pounding the table on Amazon. First time I've done it in a long time. Baba is a similar company. It's the Chinese version of Amazon. And I've said, unless you think the Chinese consumer is going bye-bye, which I don't, to me, BABA's going to continue to grow. With this virus, unfortunately, there may be a second wave coming next winter. People are going to continue to shop from home. Alibaba is going to be a beneficiary. Wendy's, although they have high debt, very little has to be refinanced this year. They have super sensational free cash flow. They do things better than the rest. They remodel the restaurants, they add breakfast, they do things better than McDonald's and the competitors. I think they may cut the dividend on Wendy's, but I think that's a goodie. JP Morgan, I think in times like this, I want to own best in breed. I'm okay making less money owning best in breed than taking a shot. So JP Morgan, it's a different company than '08. '08, they were much darker in their stances and their proclamations of the economy. Jamie Dimon has evolved. He's now has more of a social justice bent to him. But the companies are saying they have over-reserved. I think this was the kitchen sink right now, adding loan loss provisions. But I want to own best in breed. I want to own Jamie Dimon, and I don't think the dividend's going anywhere. And finally, I have two more. EPD Energy Enterprise Products. It's a master limited partnership, plays on the oil space. If I have to go into energy, I think something like 40% of the company MLP is owned by insiders. The dividend is fat, almost 11%. Okay. It may get cut a little bit, but this one long term is not going anywhere. And finally, probably one for today, ECL Ecolab. They're into sanitizing. They're into things that we're going to need for years to come. They've got phenomenal pricing power, robust margins. I think it's not a purest of pure plays, but it's a pure enough play. It's usually an expensive stock, but it obviously got a lot cheaper during the decline. I think you got to stay diversified. Don't catch the falling knife in the cruise lines and the airlines.
All right. Paul, we're going to have you back on, especially when we hit 30,000, right, to celebrate this call, because
I hope a lot sooner,
but that we will,
yes, I'll
right?
be happy to be with you in person at Dow 30, 40, and 50,000. Right.